Hello everyone, today I'm going to talk to you about strategy and high growth stocks. How do we spot high growth stocks? How do we pick the best of all the growth stocks out there? This is the topic of our video today. We'll go over many metrics from growth to acceleration, to price momentum, to earning momentum, to revisions. A lot of very interesting topics. And you'll see that we have all the tools to really do a great job helping you picking those great stocks. So without further ado, let's start. The system, as you can see, series of widgets that you have on the top. There's a signal, there's the matrix, there's the P ratio, there's the revisions. You can just click and turn them on. When we focus on a stock, first off, we focus on the earnings, or how much money is the company making. We have a model for that, which is the EM score. EM score is really the ability to, there's a little drawing here, is the ability to very quickly hone in on stocks that have the best ranking or scoring in earning momentum. We take sales and earnings and we compute a score for every single stock out there. And any EM greater than 0 is very good, and any EM greater than 20 is truly extraordinary. So this is really what we want, is stocks that have an EM greater than 20 or even greater than 10, it's great, or even greater than 0. Everything below 0 would be stocks that are not in momentum, both sales and earnings, and maybe not worth your time. That being said, we always advise people to do their own research and dig into why a stock is an EM9 or an EM1 or an EM20, because sometimes you can have some fringe effect where a stock is right on the fringe of have a great score, but it's not, and you'll be disappointed. But very quickly, with an EM score, you can get some of the best stocks. In fact, we have a pre-canned search ready to go. You just click on best stocks here, and it will go in the screener and show you what are the best stocks that you can find out there. Okay, so we'll see it in a second. So what we can have here is, once you have that EM score sorted out and you think you have good candidates, you can dig into their earning matrix here to see if you can really understand why the earning momentum is what it is. So let's go to the screener and let's close all these searches here and pick an earning momentum that is greater than, let's say, 10. Okay. And then we have a couple of names. We have Nvidia, Amazon, Google, Meta, Broadcom. So let's go into Broadcom, for example. Broadcom is EM33, EM20, EM6, 5, 6, and so on. So Broadcom is really in earning momentum. So what does that mean? That means high growth in earning per share. So we have 1.1 last year, 1.6 this quarter compared to last year, same quarter last year. That's a 45% increase. That increase is important. Previous quarter was 28, now it's 45. And that's an acceleration of 17.53. That's a pretty impressive acceleration and growth. If you think about it, it's almost 50% growth year over year, right? So that's impressive. Let's have a look at sales. Sales are the same, 50% growth, 47, 51, 25, a little bit deceleration here, but still very impressive growth. So we carry on with this, and so we look at earning per share and sales, and we've defined that this number would be the most important. That 45% increase earning per share, quarterly, year-on-year change is the most important. The second most important is the acceleration. So let's go into the screener and filter on those two metrics and see what we get. So we go into the earning EPS matrix here. We pick that field, EPS, this quarter compared to Q-4, so 4 quarters ago. And we'll also take this one, which is the acceleration in earning per share from this quarter to the previous one, which is actually comparing year-on-year acceleration, because each of those growth quarters are based on year-on-year. So let's have the earning per share growing more than, say, 20%. And let's have this acceleration grow more than, say, 5%, right? So now we have 404 stocks that are in our list. We got the Amazon, Meta, Netflix, and so on. Kind of some usual suspects here, Goldman Sachs, Palantir, and so on. It's a bunch of names. We want to do the same with sales. Why? Because sales is also as significant as earnings, and we want those sales to be accelerating as well. So let's put some growth here for sales. Let's put like maybe less stringent, 10% on sales and acceleration. Let's keep it to positive acceleration. All right, so now we have 266 names. So that's great. That's a very good start. What that does is it actually makes sure that you have good companies, right? So it's not always the case. Sometimes what people do is they insert the previous quarter, Q-1 compared to Q-5, and they also want that previous quarter to be positive in growth. Why? Because you don't want to have like an incident and have just one quarter that was very positive and then the previous one were all negative. So you want at least 2 quarters in a row that are positive. In fact, we have sequential increase in quarter and sales. Sequential increase in sales or earning per share. So you have sequential increase in EM, which you can see here, decrease in EM, and positive sequential EPS acceleration. So we can pick this one and sequential positive sales acceleration and pick that one. So we can pick those two and we can say that we want sequential acceleration for at least 2 quarters in a row for earning per share and for sales, right? So now we have 78 stocks, and we can type on ASML, this is EM20, and we get a good candidate here. It's been acceleration 2 quarters in a row, 30%, acceleration 3 quarters in a row even on that one. So that's a good candidate. Let's pick another one, AZN, high growth, high acceleration, accelerating 2 quarters in a row and getting better. ISRG, 3 quarters in a row acceleration, sales up 25% and 38. Really impressive growth. Yeah, really impressive growth. So this is typically high growth stocks. So what I have here is really high growth stocks that are good companies with good sales, good earnings, that have not only good growth but also accelerating growth. So we're at the top of the crop here. That's actually 80 stocks that are really up there, really top of the crop. So they have true earning momentum and acceleration momentum, right? So that is very important. The second thing is price. Price action is important. That's the second part of EPS Momentum, is the ability to look at prices and have price momentum. So I have a series of tools for that. So you can go into the price statistics or price analytics, both, and you can look at companies that are up for the year or down for the year or up for the month or up for the week in a very classic way. But maybe there's a potential to specifically in that downturn. So first off, before I go into that thought, I'd like to show you how you can say how a company can be distant from its high. So the price distance to its high of 252 days here, we can make it so we only want the stocks that are 10% away from their high, right? Even 0%. So every quote here is actually making its high. It's 28 and it's pretty impressive rally growth, really pretty impressive. Maybe a little bit less acceleration on sales, but still very impressive growth. Another one, so I went from about 80 stocks to 15. That's how stringent it is. Can pick another one, so CAFCO, close to its high. Not at its high, but close to its high. The reason this is so stringent is because the market has been on a downturn for several weeks. So that might not be the best solution to get a stock that, you want. Many of the stocks out there have been down because the market has been down, not because of their own fundamentals. So in order to really pick great stocks, we have the ability to look at the price slope, 5-day and 10-day. So the price slope 10-day is really the slope of the curve, so curve of price. So let me just remove a few fields here because we don't need to display it all, and we'll have a little bit more space on the screener. Now that we've done what we were supposed to do with these, it's still filtering, but it's not displaying it. All right, so now I want positive slope for the next 10 days, for the previous 10 days. So it really takes a regression line and draw the line on stocks that are up for the last 10 days. And you can see it here. So that leg here is important. Market downturn and then turn around, right? What I can also do is I can even filter for the last 5 days to be even higher in slope. What does that do? Well, it gives you stocks that not only was up in the last 10 days, but shooting up in the last 5 days in an exponential way. So that is really, really valuable because I can quickly sort through, let's say, the 5-day highest increase, this one, Marvell Technology, and well, the 10-day slope is up and the 5-day is also up, and the 5-day maybe a little bit more. Well, let's say this one, same thing. Downturn, 10-day is up, 5-day up more, and so on. So we can go with Hingham. Right, that's as well. So I can be even more stringent on the 10-day. I want a slope that is higher, or on a 5-day. This is going to be very restrictive, and the list is going to go to 22 names now. So we get Amphenol, for example. There you go, 10 days and 5 days. So now we've identified high growth stocks with earning per share momentum, sales momentum, and price momentum, which is really, really important. So those are very key and crucial for your analysis. What you want also is you want Wall Street buy-in. So you want Wall Street approval. There's an army of analysts at Wall Street that are doing their job every day. Great job to write research about companies and revising the estimates upward or downward. Well, we have the revision widget that helps you see this. You can see a 37% increase in revision for that specific stock since the beginning of the quarter. So here, with the beginning of the quarter, it's 30% increase in revision. In fact, if you click on data here, you can have a look at all the revisions that you want compared to the chart. So I can see the revision and the chart. See how the revision's been up and up and up. And that downturn here didn't really translate into the revision. Maybe that little blip here, but not much. So it's really impressive. The 90-day revision is up 47% as well. So let's go into Screener and filter on these revisions. So let me close all this and filter on the change, absolute change for since the beginning of this quarter for revision. And I want that change to be positive, a bit more than 0, like positive. Now I have 15 names. So Rambus, Amphenol, Marvell, rallying stocks, earning momentum, price momentum, estimates momentum, all in there, right? So that's really, really valuable. Now that Wall Street has an opinion on these stocks, we want to see if asset managers are actually buying these stocks and which stocks is bought the most. So we have the dark short here, which are the institutional volume in the name. Why it's institutional? Because it's actually traded outside of the exchange. So it's really asset managers reaching out to their brokers or market makers and telling them, I want to do 100 million of IBM. I obviously can't go to the exchange because it will rip the book. So give me a block on that, and that's the volume. So 52% of the volume is traded outside here. But the thing is, because it's reported on naked short from the broker standpoint, that means they are buyers. So that means that 60% of the volume here is institution buying. So we want that level to be the highest of all. So the percentile here is the highest one. So percentile 60 is not the highest, percentile 100 would be. So we would go to volatility here and dark short percentile, and then filter by the best percentile. So Amphenol is one where we have about, from a historical standpoint, we have about 42, even 45, 44.78 in institution buying. So a very abnormal and unusual level of institutions buying Amphenol right now and pushing the name. Technoglass, TGLS, let's have a look. Very high level, 60%, very high. I mean, in some levels was 66, was 65, but 60% is pretty cool. Percentile 89. And then we can see the name is plateauing or doing a base, and maybe rallying or not. EverQuote, we saw EverQuote earlier, has a decent level. What else? We have AROC. AROC percentile is 33, so let's do some filter here. Let's do filter of, let's say, 60%. Well, we only have 4 names. So USBC Bank Financial is another one. High volume and high momentum and price. So it's pretty important here. So again, I'm being very stringent here on everything, but the dark short percentile, the revisions, the Wall Street revisions in momentum, the earning per share, the sales momentum, the price momentum, all of that is very, very crucial for your analysis and for you to do stock picking. So you need to have all the tools. You need to quickly be able to action them. We've created some pre-can acceleration searches. So new acceleration, you would just click here and you would go to the filter and just filter for all the best acceleration stocks. So you can filter for, say, acceleration 3 quarters in a row, and then you get cadence design, and off you go. You get 100% percentile here. So big push from institution, big momentum. Stock is pretty flat here, maybe preparing something. So yeah, this is very quickly get all the tools, and you can carry on and add your criteria there and do your research. All right, I hope it was useful. Thank you very much for the time. Any questions, send us an email at support@epsmomentum.com, and thank you very much for your attention.